Good evening, everyone. While we focus a lot of attention on how to buy stocks, how to shortlist stocks, and we eventually go and take positions as well, because without that, there's no chance of or no probability of growth in wealth. However, after a point, it becomes very difficult if your portfolio is significantly big, significantly diversified in terms of the number of stocks. It becomes extremely critical to be able to be watchful about what is happening in each stock, and we tend to ignore a lot of our positions which have grown massively, and they have turned a little bit problematic, and we kind of ignore because of paucity of time, because of a mindset of long term investing, or it could be anything, right? The mindset of long term investing works, but your stocks will only be one or two in your portfolio which will really make that 10 or 20-year kind of a run. But everything else keeps on correcting as and when the market cycles are correcting. So, in today's session, I want to focus on how I track my investments, and to what extent do I look at it, and how frequently do I uh, revisit them to understand if their fundamentals have changed, or has any change come uh, into play, because of which I have to take a decision on it, either to part book, either to cut losses, or either to book it completely. So I just want to give you a quick round of what I try to do. Now let's assume that this is my core watch list. Okay, let's assume that these are all the stocks companies that I hold, and currently there are about 31 holdings that are there in this list. Now in Screener, there is a fantastic way to manage all of this. Is you go back to the feed, and when you go to the feed, you get everyday notifications on what is happening on each of the stock. Now, not everything is worth reading, because some of them are uh, very operational in nature, about dividends, unaudited financial results. But when you come to the right side here, you will see that there is a upcoming results list. Right now, this is very important. And this list, if you see, is very confined to watch my what my watch list is. So generally, the quarterly results keep coming, but I go down to the quarterly results and I check for, by watch list I want to filter in my core watch list. Whatever is in my core watch list, I want to understand what the result has been like. So if we take Arcane Chemical, which I spoke about a few days ago, they have given their December numbers out. 413 has been the sale, the net profit has been 102, and there has been a rise in EPS. So, which is decent. The P still is at 19.1, which is well below the industry. So, I don't take any action on this, right? Then, just for example, CDSL 214 in terms of the sale, and 107, that's almost 50% net profit. Gujarat Ambuja Exports, similar, just to understand it. And if you want to deep dive, then you can go to that actual stock and see why a particular stock was not able to perform as it promised. If you see Dhanuka Agritech, 403 in sales, only 45 crore in profit, which seems a little worrying. But again, if you go back and see the stock, let's just go here and look at the stock. In the quarterly results, if you see, every time in September there is a spike in sale because of the seasonality of business, and then there is a drop in December. And again, the 3 quarters are pretty much in the same range. Again, in September, we have a spike, 3 quarters in the same range. Again, in September, and then 3 quarters will be in the same range. So, have they done anything wrong or anything concerning? Not really. Of course, the OPMs have reduced a little bit, but a lot will come out in its yearly results, right? This doesn't mean that there is anything to worry at the moment. Now, out of this entire list, and this list can keep going, but out of this entire list, there was only one worry that I had, and I'll go to that. I had bought a few positions of the Stock Nowcar Corporation. It's mostly a cargo transit services company. If you see, the stock P right now is showing as 331, which was not the case until yesterday. Now, I had bought the stock somewhere at, I think, 60 or 59, and right now it is trading at 110, which is almost touch 100% returns in merely 4 or 4.5 months. What has happened in the stock in its quarterly results is it has given a sale of 117 crore, and there has been an expense of 105 crore. It was never one of the large operating margin companies, but this year we are seeing a reduction in it, and this quarter especially I'm seeing a reduction to 11%, which means somewhere the expenses are growing slightly higher than what their sale value is. It could be because of any reason. Now, I've not found the reason yet, but the employee cost has risen a little bit, but that could just be one of the reasons, right? It was the employee cost was only 4% of their overall sale in 2020, but now it has almost doubled. But if you look at the sales values on a yearly basis, they have significantly increased as well. And if we look at the yearly cost, then we'll get a better picture on where the costs have increased. It could be employee, it could be manufacturing, but we'll only get to know when the yearly results in March are out. But right now, this is definitely a concern for me when I have net profit as a negative 15 crore number, which was never the case in the past two or 3 odd years, right? What that makes it is this company is now had a industry P of 47, and it is now 7 times of what the industry P is, which I don't like personally. So there is a very high probability that I will part book, because I was expecting more from the stock because the P was not as high all this time. If you look at it right now, the P is not reflecting the 331 number, but it will reflect on the 5th of Feb when the markets open. But if you see, the number here is at 38, right, which was well below 45, which was the industry P. But now it is just going to shoot up to 331, and that is going to be concerning for me. The moment I get that kind of a feeling, I make sure that I book my profits, right? Because I've put in the effort of ensuring that I was able to pick this stock, I was able to run through the trend, and I've made close to 90% right now, even counting on the stock. Why do you want to let that kind of profit go, right? So that's all I wanted to cover in today's video. So go to screener.com, create your own list, see if you can track the companies that you hold. It is a exercise that you can do weekly, because it's not always the earnings season. You can do it once a quarter, whatever best suits for the time that one has. But in my opinion, I make sure that I go and visit my results lists at least bi-weekly, which helps me look at all the new quarterly results that have come in, and to track anything that is unusual in any of the companies. If you are more interested, you can go join their calls where they call in all the analysts to explain why they went through certain uh, aspects. But I generally read and I try to find out what has gone wrong in a particular quarter's result. That's all I had to cover. I hope this was insightful. I think more than investing new stocks, maintaining the current ones is very important. Until I speak to you next time, I wish you good luck and good investing. Bye bye.